Tēnā tātou katoa, good evening. Stupendously strong. That's how one of our largest banks, ASB, has described the economy after Stats NZ announced a 2% lift in GDP, exceeding market expectations. The rise was driven by the services industries, up 2%. The transport, postal and warehousing industry was the biggest contributor to growth, up 9.7%. There's also been a significant rise in both domestic and international air travel. But economists say it's getting hot in here, and beware the boom before the bust. Zane Small has the details.
With Christmas less than 2 weeks away, Auckland's Sylvia Park Mall is humming. Shoppers making the most of free wrapping services after spending up large.
Spending a lot more this year.
Spending up large this Christmas?
Yeah. I've been told to keep it careful.
The shopping mall's management is stoked.
This year it's going really well. We're doing better than we did last year, but we're actually over what we did in 2019, which is fantastic.
All that festive optimism reflected in Stats NZ's latest gross domestic product update, considered a measure of how well the economy is performing. GDP rose 2% in the September quarter, following a 1.9% rise in June.
A lot stronger than what forecasters were picking.
Our GDP's been a bit all over the place since COVID arrived in 2020. See how it was reasonably steady in the years prior, and then bang, seismic spikes and falls thanks to lockdowns. But with COVID restrictions now far behind us, the cash is flowing. Stats NZ says the biggest contributors to growth this quarter was the transport, postal and warehousing industry, up 9.7%. And with the border fully open, there's been a rise in spending on domestic and international travel. But economists say all that demand will just keep pushing up already inflated prices.
Increasingly, there is a much greater level of competition for a much more limited pool of talent and limited pool of materials. We've got to slow down harder and faster in order to get inflation back under control.
That means more interest rate hikes.
I think people should look ahead and go, okay, if I've got a mortgage, what are my future payments going to look like?
The Reserve Bank's admitted it's deliberately engineering a recession to bring down inflation, and it's expected to hit us next year.
The Reserve Bank is intending for that squeeze to go on because collectively we've been spending more than what we can really deliver at a reasonable price.
Despite all the doom and gloom, the malls are lapping up the spending boom.
A whole flood of happy shoppers, yeah.
A spending party, but one that could come with a real hangover.
Well, Zane joins us now. Kia ora, Zane. Is there any good news on the inflation front?
Well, what we're seeing right now is that Christmas demand, but the household spending in the September quarter did ease slightly. It was down 0.1%, which could indicate that people are starting to see the signs and tightening their belts a bit. But Intrametrics says we're just not seeing a change coming fast enough, and they say the Reserve Bank will have no choice but to keep lifting those interest rates to keep inflation down. Now, both of the economists I spoke to today are expecting 75-point basis increase to the official cash rate when the Reserve Bank delivers its next monetary policy statement on February 22nd. That'll bring it to 5%. So mortgage holders, brace yourselves.
Zane, tēnā koe.